Your first $100,000 in savings feels almost impossible. Not because you're lazy, not because you're bad with money, definitely make enough. It feels impossible because no one explains the one moment when everything suddenly changes. For years, progress feels painfully slow. You save, you budget, you invest, and yet your net worth barely moves. But then something strange happens. Your money starts growing faster than you can save it. That's the exact moment when people go from feeling broke to realizing they're actually building wealth. And in this video, you'll discover why the first $100,000 is the hardest milestone in personal finance. The psychological trap keeping most people stuck. The exact shift that makes wealth building accelerate, and how you can reach your first $100,000 faster using smart investing. Strategies. If your goal is financial freedom, passive income, and long-term investing, this video might completely change how you think about money. So stay until the end, because the final strategy could literally shave years off your journey to $100,000. And if you want more videos about investing, saving money, and building wealth, make sure you subscribe and turn on notifications so you never miss a future breakdown. Now, let's talk about the real reason the first $100,000 feels impossible. The painful beginning of wealth building, and when at the start of your financial journey, everything seems slow. Painfully slow. You begin to learn about personal finance, investing, budgeting, and how to save money. You open your first investment account. Maybe you invest in stocks, index funds, ETFs, or retirement plans. You feel excited. You imagine your future financial independence, but then reality knocks. After months of saving, you check your portfolio, and it's barely moved. Maybe you saved 2,000 reals this year. Maybe 5,000 reals. Maybe 10,000 reals. But when your goal is 100,000 reals, that number seems ridiculously distant. And that's when most people give up. They stop investing. They stop saving. They assume that building wealth only works for rich people. But the truth is quite different. The initial investment phase seems slow for a simple reason. Your money isn't doing the hard work yet. You are. Here's a powerful truth about money that most people don't realize. Your first $100,000 is the hardest milestone in personal finance. But after that, everything accelerates. Why? Because of one unstoppable force in finance: compound interest. Compound interest is when your investments start generating returns on top of returns. Your money starts making money, and that money starts making even more money. At first, the effect is tiny, almost invisible. But once your investment balance grows large enough, the growth becomes dramatic. Let's break it down. If you invest $1,000 and earn 10% per year, you make $100. Not very exciting. But if you invest $100,000 and earn 10% per year, you make $10,000. That's when something powerful happens. Your annual investment returns start matching or even exceeding your yearly savings. Your money begins working harder than you do, and suddenly, reaching $200,000 feels easier than reaching $100,000 ever did. The biggest challenge on the road to $100,000 isn't money. It's psychology. Most people quit right before the magic happens. Because early investing progress feels invisible. Saving your first $10,000 feels like climbing a mountain. Getting to $25,000 feels exhausting, and $50,000 can take years. But those early years are secretly building the foundation for exponential growth. Think of it like pushing a massive boulder. At first, it barely moves. You push with everything you have. Nothing happens, but eventually the boulder starts rolling. And once it's rolling, momentum takes over. Wealth works the exact same way. So, how do people realistically reach their first $100,000? It's rarely from one lucky moment. It's usually a combination of 5 powerful habits. 1. Increasing income. Saving money matters, but increasing your income accelerates everything. People who reach $100,000 faster often build side hustles, start online businesses, develop high income skills, negotiate higher salaries. Growing your income increases the amount you can invest consistently. And consistency is the secret weapon of wealth. Consistent investing. The most successful investors don't wait for the perfect time. They invest every single month. This strategy is called dollar cost averaging. Instead of trying to time the market, you invest regularly in stocks, ETFs, and index funds. Over time, this strategy reduces risk and builds wealth steadily. Consistency beats perfection every time. Avoiding lifestyle inflation. One of the biggest financial traps is lifestyle inflation. Your income increases, but so do your expenses. A better car, a bigger apartment, more subscriptions. Marty spend. People who reach $100,000 in net worth often keep their lifestyle modest while their income grows. They invest the difference. Long-term investing. Wealth isn't built overnight. The stock market rewards patience. Historically, the S&P 500 has returned around 10% per year, on average. People who build serious wealth understand one simple rule: time in the market beats timing the market. The longer your money stays invested, the more powerful compounding becomes. Staying in the game. The most important habit of all is simple: don't quit. The people who eventually reach $1 million are rarely the smartest investors. They're the most consistent. They stay invested during market crashes, recessions, economic uncertainty, bear markets, because they understand one thing: volatility is temporary, compounding is permanent. Something fascinating happens once you cross the $100,000 milestone. Your investments begin generating serious momentum. Let's say you invest $100,000 and earn 8% annually. That's $8,000 per year, without adding another dollar. As your portfolio grows to $200,000, that becomes $16,000 per year. At $500,000, that's $40,000 per year, and eventually, your investment returns can exceed your annual salary. That's the moment people experience true financial freedom. Your money is finally working for you, instead of the other way around. If your goal is to accelerate your path to the first $100,000, focus on 3 key strategies. Strategy 1: automate investing. Automation removes emotion. Set automatic transfers into your investment accounts every month. Treat investing like a bill you must pay, except this bill pays your future self. Strategy 2: focus on low-cost index funds. Many successful investors rely on low-cost index funds. They offer diversification, low fees, strong long-term returns. Instead of chasing risky investments, focus on steady long-term growth. Strategy 3: invest early. Time is the ultimate wealth multiplier. Someone who invests $500 per month starting at age 22 could end up with more wealth than someone investing $1,500 per month starting at 35. Why? Because of compounding. The earlier you start investing, the less money you actually need to contribute. The biggest secret about the first $100,000 isn't strategy. It's persistence. There will be months when investing feels pointless, years when your portfolio barely moves, times when the market crashes. But the people who succeed understand something powerful. Wealth building is not about speed. It's about staying consistent long enough for compounding to take over. And once it does, everything changes. The journey to your first $100,000 might feel slow. It might feel frustrating. It might even feel impossible. But remember this: every investor who now has $1 million, $5 million, or $10 million once stood exactly where you are, looking at that first $100,000 milestone and wondering if they'd ever reach it. The difference: they didn't stop. They kept investing. They kept learning about personal finance, investing strategies, passive income, and wealth building. And eventually, the impossible became inevitable. Master the power of high-income skills. One of the fastest ways to accelerate your journey to $100,000 in net worth is learning high-income skills. Because while investing in stocks, ETFs, and index funds is powerful, your income determines how fast you can invest. Think about it. If someone invests $200 per month, reaching $100,000 could take decades. But someone investing $1,500 or $2,000 per month can reach that milestone dramatically faster. This is why many people who achieve financial independence focus on increasing their earning power first. Some of the most valuable high-income skills today include digital marketing, sales software development, copywriting, AI automation, data analysis, content creation, online business. Building these skills allow people to earn more money without necessarily working more hours. And once that extra income starts flowing, you can redirect it straight into long-term investments. This creates a powerful cycle. Hiring Mori, investing faster, compounding fast. Build multiple streams of income. One paycheck alone rarely creates serious wealth. But multiple income streams can dramatically accelerate your path to $100,000. Many financially successful people eventually build income from different sources such as side hustles, freelancing, online businesses, dividends from investments, digital products, affiliate marketing, rental income. Even an extra $300, $500 per month invested consistently can make a huge difference over time. Because addition just income. It's fuel for your investment portfolio, and once invested, it starts generating passive income and compound growth. Control the one thing most people ignore. There is one factor in personal finance that silently destroys wealth, and most people never notice it. Fees, investment fees, bank fees, trading fees, management fees. Even small fees can destroy thousands, sometimes hundreds of thousands of dollars over time. For example, if you invest $100,000 and earn 8% annually, but pay 2% in fees, your long-term returns shrink dramatically. Over decades, that difference could cost you tens of thousands of dollars. This is why many experienced investors prefer low-cost index funds and ETFs. They keep fees extremely low while capturing the overall growth of the stock market. Less fees means more money stays invested, and more invested money means more compounding power. For many people, the journey to the first $100,000 feels like walking through a fog. You're moving forward, but it's hard to see the results. Then one day, something surprising happens. You check your investment portfolio, and your money grew by $3,000, $5,000, or even $10,000 in a year without you doing anything. No overtime, no extra work, no additional effort. Just compound growth doing its job. That's the moment when people finally understand the true power of long-term investing, because suddenly the rules change. Your money becomes a financial engine, and that engine keeps getting stronger. Many people assume wealthy investors must be extremely lucky, financial geniuses, or experts at predicting the market. But research into wealth building and personal finance habits shows something very different. Most wealthy investors follow surprisingly simple principles. They invest consistently, avoid unnecessary debt, live below their means, focus on long-term investing, and ignore short-term market noise. That's it. No secret formulas. No magic tricks. Just discipline and patience. And the longer they follow these habits, the more powerful compound interest becomes. Crossing the $100,000 milestone is more than just a number. It's a transformation. Before $100,000, progress depends mostly on your effort. After $100,000, Progress increasingly depends on your investments. Your portfolio starts doing the heavy lifting. And every additional dollar invested accelerates growth. That's why many financial experts say the first $100,000 is the hardest, because it's the point where momentum finally begins. Unfortunately, many people unknowingly sabotage their own wealth-building journey. Here are 3 of the most common mistakes. Mistake 1: waiting for the perfect time. People delay investing because they're waiting for the perfect market conditions. But markets are unpredictable. The perfect time rarely arrives. The investors who build wealth simply start investing early and consistently. Mistake 2: trying to get rich quickly. Some people chase get-rich-quick schemes. Crypto hype, day trading, speculative investments. While some people get lucky, most lose money. Long-term investors understand that steady compounding beats risky speculation. Mistake 3: panic during market crashes. Market crashes scare people. But historically, every major crash has eventually recovered. For long-term investors, downturns are often opportunities to buy investments at lower prices. Those who stay calm during volatility often benefit the most. Reaching your first $100,000 doesn't require perfection. It simply requires a system. Here's a simple wealth-building formula used by many financially successful people. Earn more money whenever possible. Save a percentage of every paycheck. Invest consistently in diversified assets. Avoid unnecessary debt. Stay invested for the long term. Follow this system long enough, and the math eventually works in your favor. Here's something powerful about starting your investing journey today. Every year you delay investing makes the journey harder. Because compounding needs time. Someone who starts investing today might reach $100,000 years earlier than someone who waits. That time difference can eventually turn into hundreds of thousands of dollars. Which is why the most valuable financial habit is simple. Start now, even if it's small. Even if it's just $50 or $100 per month, the amount matters less than the habit. Because habits create momentum, and momentum creates wealth. There's a moment in every wealth-building journey that feels almost unreal. At first, your progress depends entirely on how much you save. You work more hours. You increase your income. You cut unnecessary expenses. Your financial growth depends on discipline and effort. But eventually, something incredible happens. Your investment portfolio begins generating returns that rival your actual work income. Imagine opening your portfolio and seeing it grow by $500 in a month, then $1,000, then $3,000, without doing anything, no extra shifts. Nuska jobi nizel. Just compound interest and long-term investing doing what they were designed to do. That's when people realize something powerful about financial freedom. Wealth isn't built from one giant leap. It's built from thousands of small, consistent decisions. Why consistency beats talent in investing? Many people believe successful investors must be incredibly intelligent. But the truth is surprisingly simple. The most successful investors are often just the most consistent. They invest during good times. They invest during bad times. They invest during market crashes, recessions, and uncertainty. While others panic, they stay calm. While others quit, they stay invested. Because they understand the most important principle in long-term investing: the market rewards patience. History has shown that the stock market grows over long periods of time, and those who stay invested long enough often benefit from that growth. This is why strategies like dollar cost averaging index fund investing, long-term portfolio diversification have helped millions of investors build wealth steadily, not overnight, but reliably. Talk to people in their 40s, 50 or 6 about money, and many will tell you the same thing. Their biggest financial regret isn't losing money. It's not starting earlier. Because once you understand compound interest, you realize something shocking. Time matters more than almost anything else. Someone who invests small amounts early can outperform someone investing large amounts later. Why? Because compounding needs time to multiply. Every year you invest gives your money another opportunity to grow, another opportunity to generate returns, another opportunity to build momentum. And momentum is the hidden engine behind financial independence. Your future self is watching right now. The financial decisions you make today are shaping your future life. Future may less about able to travel, able to retire earlier, able to choose work because you want to, not because you have to, or future you might still be struggling financially. The difference between those two futures often comes down to the habits you build today: saving money, investing consistently, learning about personal finance, wealth building, and passive income. These habits may feel small today, but over years, they transform your financial life. So, if reaching $100,000 feels impossible right now, that's normal. Almost everyone feels that way at the beginning. But remember this: every investor who eventually built serious wealth once started with $0 invested. No momentum, no compounding, just a decision to begin. And over chimisisting, smart financial habits, and patience. That first impossible milestone slowly became reality. Then the second milestone came faster. Then the third. Then the fourth. Until one day they realized something incredible. They weren't just saving money anymore. They had built a system that creates wealth automatically. And that system all started with the decision to pursue the first $100,000. If you're committed to building wealth, investing smarter, and achieving financial freedom, take a second right now and watch this video. This helps more people discover powerful ideas about personal finance, investment strategies, and passive income. And if you want to continue learning about investing in the stock market, how to build your first $100,000, how to create passive income streams, how to achieve financial independence faster, be sure to subscribe to the channel and turn on notifications. Because the next video will reveal step by step what to do after saving your first $10,000 and how you can avoid the mistakes that keep you stuck. And remember, the first $100,000 seems impossible until the day it finally happens.